Don't let the upcoming recession and market crash scare you. Learn the actionable steps recommended by the legendary Warren Buffett to become a millionaire and thrive during tough economic times. Hello everyone, and welcome back to our channel. In today's video, we're going to be discussing a very important topic that has been on everyone's mind lately, especially in light of the economic uncertainty that we've been experiencing over the past couple of years. That topic is how to become a millionaire from the 2023 recession and crash. As we all know, Warren Buffett is one of the most successful investors of all time. He's built his fortune by investing in solid companies that have a proven track record of success and by sticking to a long-term investment strategy that emphasizes patience, discipline, and a willingness to take calculated risks. So, if you're looking to become a millionaire during the upcoming recession and crash that many experts are predicting for 2023, this video is for you. Let's get started. Number 1. Invest in solid companies. The first lesson that we can learn from Warren Buffett is to invest in solid companies. This means investing in companies that have a proven track record of success and that are likely to continue to perform well even in difficult economic times. Warren Buffett has always emphasized the importance of investing in companies that have a competitive advantage over their competitors. This could mean investing in companies with strong brand recognition, companies with valuable intellectual property, or companies with a strong network effect. When you invest in these types of companies, you're not just investing in their current success, you're investing in their ability to continue to innovate and grow over the long term. This is what's made Warren Buffett so successful over the years, and it's a lesson that we can all benefit from. Number 2. Stick to a long-term investment strategy. The second lesson that we can learn from Warren Buffett is to stick to a long-term investment strategy. Warren Buffett has always been a proponent of buying and holding stocks for the long term rather than trying to time the market. This means that you should focus on investing in companies that you believe will perform well over the next decade or longer, rather than trying to make short-term gains by buying and selling stocks on a daily or weekly basis. When you invest for the long term, you can also benefit from the compounding effect of your investments, which can result in significant gains over time. It also means that you don't have to worry as much about short-term fluctuations in the market, which can be caused by a variety of factors that are outside of your control. Number 3. Practice patience and discipline. The third lesson that we can learn from Warren Buffett is to practice patience and discipline. Buffett has famously said that the stock market is a device for transferring money from the impatient to the patient. This means that successful investing requires a long-term perspective and the ability to withstand short-term fluctuations in the market, rather than trying to time the market or chase after the latest hot stock. Investors should focus on investing consistently over the long term and sticking to a well-thought-out investment strategy. In addition, practicing discipline means avoiding emotional decisions and sticking to a set of rules or guidelines for investing. This can help investors avoid making costly mistakes and stay focused on their long-term goals. Ultimately, practicing patience and discipline can help investors achieve better long-term results and avoid the pitfalls that often come with short-term thinking. Number 4. Surround yourself with knowledgeable advisors. The fourth lesson that we can learn from Warren Buffett is to surround yourself with knowledgeable advisors. Warren Buffett has always emphasized the importance of seeking out the advice and counsel of experts in various fields, including finance, accounting, and legal matters. By surrounding yourself with knowledgeable advisors, you can gain access to valuable insights and perspectives that can help you make better investment decisions. This can include working with a financial advisor to develop a personalized investment strategy or consulting with a tax professional to optimize your tax planning strategies. However, it's important to be selective about the advisors that you choose to work with. Look for professionals who have a track record of success and who share your investment philosophy and values. By working with the right advisors, you can gain access to the knowledge and expertise that you need to make informed investment decisions and achieve your financial goals. Number 5. Be willing to take calculated risks. The fifth lesson that we can learn from Warren Buffett is to be willing to take calculated risks. While investing always carries some level of risk, successful investors like Warren Buffett understand the importance of taking calculated risks to achieve greater returns. Buffett is known for investing in companies that may be considered risky, but he always does so after conducting thorough research and analysis. This approach allows him to make informed decisions and minimize potential risks. As investors, we should also be willing to take calculated risks by conducting our due diligence, analyzing investment opportunities, and understanding the potential risks and rewards. This requires a willingness to step outside of our comfort zones and consider new investment opportunities, but with proper research and analysis, we can make informed investment decisions that can lead to greater returns and long-term financial success. Number 6. Diversify your portfolio. The sixth lesson we can learn from Warren Buffett is the importance of diversifying your portfolio. Buffett is a firm believer in the value of diversification, and he has famously said, "Diversification is protection against ignorance." It makes little sense if you know what you're doing. By investing in a variety of different assets, such as stocks, bonds, and real estate, investors can reduce their overall risk and increase their chances of long-term success. Diversification can also help investors capture the returns of different asset classes, which can help to smooth out their overall returns over time. Of course, diversification does not guarantee against losses, and it's still important to do your own research and choose investments that align with your financial goals and risk tolerance. However, by following Buffett's advice and diversifying your portfolio, you can reduce your risk and increase your chances of achieving long-term financial success. In conclusion, by diversifying your portfolio and investing in a variety of different assets, you can increase your chances of long-term financial success. By spreading your risk and capturing the returns of different asset classes, you can build a solid financial foundation that can withstand the ups and downs of the market over time. Number 7. Keep your emotions in check. The seventh and final lesson that we can learn from Warren Buffett is to keep your emotions in check. Warren Buffett has always been a proponent of making rational investment decisions based on careful analysis and research, rather than making impulsive decisions based on fear or greed. During times of market volatility, it can be tempting to make emotional decisions, such as selling off all your investments in a panic or buying into a hot new stock without doing your due diligence. However, these types of decisions are often driven by emotion rather than logic and can lead to poor investment outcomes. To avoid making emotional decisions, it's important to have a clear investment strategy in place and to stick to that strategy even during times of market turbulence. It's also important to keep in mind that investing is a long-term game and that short-term market fluctuations are a normal part of the process. By keeping your emotions in check and sticking to your investment strategy, you'll be better positioned for long-term success. So, there you have it. 6 important lessons that we can learn from Warren Buffett if we want to become a millionaire from the 2023 recession and crash. Remember, there are no guarantees when it comes to investing, and there is always a certain amount of risk involved. However, by following these lessons from one of the most successful investors of all time, we can increase our chances of achieving our financial goals and becoming millionaires in the years to come. Thanks for watching, and we'll see you in the next video.